Hey everyone, welcome to the 7th episode of Traders Mindset podcast. And today we have a very special guest. Unlike the other guests who actually are core traders, today we have a guest who has built a career around finance. He started from zero nearly 7 to 8 years back, and today he has an annual revenue of nearly 25 CR. And he just doesn't trade, he also invests. He is into business of insurance, business of real estate, gold lending, whatnot. So around the field of finance, he has built nearly 7 to 8 different verticals, which actually generates him revenue. And the guest whom we have on the show today is Hari Prasad from Livelong. You might also know him with the name of Livelong Hari. So he's the founder and CEO of Livelong Wealth, and today he's going to come and share his journey with us. So before moving on, I would also like to tell you about Quick Alpha. So at Quick Alpha, we offer a wide range of services from trade automation, trade management to trading psychology sessions. So make sure you check that out by clicking on the link in the description below. You can also raise a service request and our team will get in touch with you. With this, let's quickly move on to the video, and I hope you guys enjoy this podcast. Hey everyone, welcome to the 7th episode of Traders Mindset podcast. And today with us, we have a very special guest, and that is Hari. Hari, thank you so much for coming to the show on the invite, and it's a pleasure to have you here.
Thanks, Saket. Thanks for the invite. So it's a great opportunity for me also to come and be a part of your podcast.
Thank you so much, Hari. And a lot of you might have heard about Hari, right? So the thing is, usually when people come on this podcast, they are mostly traders. They do a lot of strategy and so on. But today the podcast team is a little different. We are not just talking about trading, but we are talking about how you can build a business around the field of finance. So Hari is the founder of Livelong Wealth, and Livelong Wealth is into multiple different verticals, starting from market to real estate to gold to lending and whatnot. So Hari, can you just take us through what exactly Livelong Wealth does?
Yeah, sure. So to speak about Livelong, the name, I just wanted to say that we started majorly first in the healthcare domain.
Okay.
And then they reached a point when I figured out, okay, this is not what I'm passionate about. So I was always doing participating in the markets from the age of 18.
Okay.
And then later on, we pivoted completely to the financial market. So at the moment, we deal with respect to everything in the financial markets, apart from broking. So apart from broking, everything else though we kind of actually do.
Okay.
Let it be advisory, let it be education, let it be insurance, let it be business consulting related to purchase of gold or other commodities, or let it be kind of real estate. So anything related to the financial markets that we are doing. Yeah.
So how did it all start, Hari? Like, which was the first domain? You said you picked the health sector as the first one. From there, how did you start to transition into various other things? What was the opportunity which you saw?
Yeah.
And then what was the issues you faced? How did you scale up?
So the biggest advantage, if you ask me, like what I got is like at a very early age, I got to work with this company called Futures First.
Okay.
So which trades in the international market. So I was trading Brent oil for them.
Okay.
And I was trading in the European markets. So the kind of exposure that I got there was like something very great. So I was working there at the age of like 21.
Okay.
So for a 21-year-old, the kind of capital I was handling and the team I was working with, they were like almost 20 years experience in the markets.
Oh, okay.
As in my mentor is currently the head of risk at Shell.
Okay.
So the expertise that you got from these people who are already there.
So even he was there in...
Yeah, he was also working.
Okay.
And in fact, like there are multiple people. So if you speak about Futures First, there are multiple people who are doing business in this financial markets in Indian markets itself. Many people who were earlier working in Futures First.
Okay.
So I got the taste of quantitative trading, like how trading decisions can be taken up on data, and that was definitely a turning point. So that is where I actually understood, okay, this is the kind of scale.
Okay, sorry to cut you off.
Yeah.
So this is actually an important question. So how do you actually get a job or land yourself in a job in Futures First? So what was that?
Yeah, so it's a very good question. So first of all, they do campus placements in colleges.
Okay.
So that is one of the ways. That is, if you're studying in IITs or NITs, most of the colleges, they appear for campus placements. The other way is you can basically apply on offline, like off campus. So if you have some idea about the markets and you're good at maths, so what matters over here is more than your understanding about the markets, how good are you at numbers? How fast are you in decision making?
Okay.
So their interviews are majorly based upon this concept called speed max.
Okay.
So if you're good at max, I'm not saying like you have to be extremely good. You can just prepare for speed max. You get a lot of questions, mock tests, everything online. You can actually apply for these kind of prop trading jobs.
Right. So from Futures First, so how did you move or transition into Livelong?
So as I mentioned to you, from the age of 18, I have been participating in the markets. But then that point in time, my expectations about the market was very unrealistic. So I was somebody who started off in the markets with a view that, say, I used to see all the stocks that used to hit the upper circuit. So, and majority of the times the stock used to hit the upper circuit, the next day it opens with a gap up of maybe 5% or something like that.
Okay.
So what I used to think is, okay, let me just go and buy all the stocks that is hitting the upper circuit, and then next day I'll be making like 5%. And many times what used to happen is, the stock that hit upper circuit today, tomorrow also will hit upper circuit.
Got it.
So I used to think that, okay, every day I can make 20% in that process. That is like I used to calculate, okay, my 10,000 rupees investment will become 20 lakhs or 16 lakhs at the end of 1 year by doing this process. And then in another 1 or 2 years, I'll make it like 10 crores or 20 crores. All those false assumptions I used to have. So that is exactly how I started. And my focus was majorly on accuracy. I wanted to be right all the time. Then I realized, okay, this is not something that practically works. And Futures First was definitely a turning point. So before joining Futures First itself, I understood, okay, there is something that I'm doing wrong.
And so this was in 18, 19, 20 period.
This was at the age of like, see, my self-realization came almost at 19.
19.
I started off the markets at 18, like mid 19. That is
19 means that is 2000?
That is 2016.
16, okay.
So that is when I realized, okay, fine. There is something that we need to do better, and it's not about accuracy, maybe about managing the risk. And once again, the challenge that we used to have, see, right now we have a lot of podcasts related to the markets, all those things. And there's a lot of people that we know, probably we can get access to also, to learn from them.
Right.
That point in time, the thing is, what is there everywhere is something that is unrealistic. And people are also made to believe in those false things.
Right.
Only once you burn your hands, then you realize, okay, this is not right. So I had to experiment and figure out, okay, this is not right.
Okay. So this first step of you transitioning from now you started trading and you were interested or keen on landing into a job around trading. You applied for Futures First. You got a job there. Then how suddenly health?
Okay, so the thing over here is health is something that I started in my first week of college.
Okay.
So I personally felt that, okay, the kind of money that I make from that particular domain is not ethical, because most of my patients were all cancer patients. People used to
patients in the sense, can you...
Clients. That's like I used to be giving medicines. We used to do delivery of medicines for people who were on regular medication.
Okay, I think this is something, again, an interesting story to...
So that's actually how the name Livelong comes.
Okay.
So we started with electronic health record management. That is, we built a software so that like you can access. So Saket is visiting a hospital in Bangalore, or Saket is visiting a hospital in Kerala. You can access your medical records from the cloud.
Oh, okay.
So we worked on building a platform where all your health records can be stored in a place, and irrespective of whichever state you are, whichever doctor you visit, you can retrieve all the data.
Okay.
So that was my concept of starting the company Livelong. But then later on I realized this is not my cup of tea, and there's something which was much beyond what I could do.
So this one, when you were doing, you were in college, right? So before joining Futures First.
Exactly.
So then, while you started this, or while you were doing this, you also realized that this is not your domain, but you want to go with the market.
Yes, because when you build a business, it's all about scalability. So that is something that I always used to look at.
Okay.
So with respect to this electronic health record thing, also we had done this project for some hospitals, some clinics. But when we go to a hospital or when we go to a clinic, their requirement is actually so custom. That is, you have to customize the solution for each client.
Got it.
So then I realized, okay, this is not something that is actually scalable. Whereas on the other hand side, right now, if you have a look at it, let it be algos or let it be advisory. So the same product I can actually distribute to n number of users.
Got it.
So you can build a business only if it is scalable. Else, so you'll actually stagnate at a point and you can't take it beyond.
Okay, got it.
So that is something that I was always looking at scale. So if I'm able to service to 100 clients, if it is a custom solution, will I be able to service to 1,000 clients or 10,000 clients? On the other hand side, if it is a one product, probably in different packaging, that also can be distributed to n number of clients.
Got it.
Whereas custom requirements is something that will actually eat up your head and will make you stagnate in growth.
So now, okay, you entered futures first, and now how did you transition, or what was that point where you decided, okay, I want to quit my job and do trading on my own?
Okay, so very good question. So the thing over here is, I didn't quit my job. So I had some, like my dad also had some health issues, due to which I had to stay away from work.
Okay.
And at the end of the day, like I realized that as long as you are working for somebody, you're just somebody who can actually be replaced. And I always felt, okay, now if I have acquired this kind of a skill set and I'm confident in something that I'm actually doing, obviously it makes much more sense for you to work for yourself than to work for somebody else. Else, though, the kind of growth opportunity that you should have should be something exponential. So yeah, maybe if I work for a firm, maybe if I stay in that firm for the next 10 years, obviously I'll have a career growth, maybe I'll make more money, or maybe I'll have more stability. But then, like, I was always excited, or I wanted to experiment something of my own, because that is the thing where you get aggressive results. And that is actually what motivated me to come into business, because I was actually confident in whatsoever I was doing. So when you reach that particular point and you know for a fact, okay, you trust yourself enough to quit a job, and you know for a fact, okay, if this doesn't work, you are confident enough to make some money to make a living. That's the point I quit.
Right after you came out, so what was that you started doing, Hari? Like, did you start trading on your own?
I was trading.
So what was the capital?
That point in time, I'll tell you. So when I started off at 18, my capital was 10,000.
Okay.
I wiped it out. Then again, I topped up another 16,000. I had my roommates and all also like putting in money. We used to trade together. You know them, like Christopher and all. Like, then that also I wiped out. Then like when I went to futures first, over there it was something different. So the company gives you money. Correct. So I was good. That was a time when I was like lucky enough to build some capital for myself. And then later on, when I started off trading, it was an account of around 50 lakhs.
Okay, okay.
That was of mine on. But thereafter, I started scaling it up, depending on the income that I got from the other streams also.
So how did you start this other stream? Like what?
Okay, that's a very good question. So like I'll tell you that point in time. So right now, almost everybody have a Demat account. But back then in 2015, 2016, people didn't even know what a Demat account was. And I still remember, like in college, there used to be like by the time I completed like my 4th year, there were like almost some 200-300 people who had come to me to know the basics of trading.
Okay.
And they used to create a Demat account also. So I'm like one of the first sub brokers of Upstocks. RKSV Securities, it was back then. So by the time I completed college, like I used to have around 200-300 people under my sub broking itself. And obviously they're not much revenue. They used to make, like I used to earn maybe some 20,000, 25,000 from sub broking that particular point in time. But once I understood, okay, this is something that actually has a requirement or a demand, then I worked on it. I scaled up that particular business. Then I think I onboarded 20x or 30x of that count in the next 2 years when I was completely focusing on that business.
So all this is sort of happening simultaneously, if I think of a timeline.
Correct.
You starting sub-broking or starting the healthcare.
No. See, healthcare, the thing was the first thing that I started.
Okay.
So that point in time, trading, all those things were not a business. It was something just like a side activity.
Okay.
But then later on, you feel, okay, this is a business that is more scalable than the other. That is when you actually pivot purely into trading and you leave the healthcare domain. Yeah.
So when you got into trading, so did you start with equities or options?
Yeah. See, that point in time, that was a time when equity used to get 40x leverage. That is, we used to get 40x. That is, if you have a 10,000 rupee account, you get 40x leverage on it. And the fluctuations were also like not like how we have right now. It was more stable. To be very honest, the price action was much more stable at that point in time.
Right.
And that was there was a period of time, you won't even believe, that point in time, even EMA crossovers used to work. Now also it works, but that time in shorter time frames also EMA crossovers used to work. That is, if you use EMA crossover, it still has decent hit rates. But right now the volatility is not
so
like what we used to have. So I used to start with equity because options was not something that I was not at all familiar with.
Right.
So equities I used to do. Now then I used to do futures. I started doing futures because I was like very much keen on this thing commodity. So I started doing futures. So then thereafter I was working in futures first. I majorly started options at the time of working at futures first because over there we used to have like all these proper educational things where you get like introduced to all these things. So I started options only after joining futures first. That is after 3 years of me getting into the markets.
Okay.
That is till then it was purely trading based upon price action, purely focusing on risk management,
Got it.
rule based system that is going to be based upon these range breakouts, all those things.
So then, so first you got into markets, and then you started trading, and then you started building businesses around market. That
Yeah.
is sub-broking, education, and
Yeah.
so on. So now, how did the transition to real estate, lending,
Okay.
insurance?
So the thing is, like, see, when we speak about the markets, the biggest challenge in the markets is a stable cash flow. So now, whenever we are actually thinking about building a business, the number one thing that we need to focus on is cash flow. So I personally believe cash flow is the king. So when we are trading, okay, you make money. So for us, like on a personal note, when we make money from trading, it's like big money. But there could be a period of time when we are in a drawdown,
Correct.
when we don't have any cash flow out of the market, and we don't have any income. So when we are building a team, so we have to pay off the salaries. And actually that is the point in time when you think about, okay, what if I have a business that is like revolving around the same financial markets domain, but which would basically give me much more stable cash flow, even though maybe the margins are less, the profit margins are less, maybe it's a conventional business. However, it could actually give me the cash flow enough to sustain my team. So then I know for a fact that, okay, on an assured basis, this much revenue would come to the company.
Got it.
That could probably pay off the salaries for the staff. And yeah, if trading is good, we have extra. And that more or less complements to whatever
and
you're
also
earning from
releases
revenue.
the pressure to perform from.
Exactly. So this is something that even I have read and I have actually like experienced this also. So when your income is purely dependent on the markets, the kind of pressure that you have to take is huge.
Yeah.
And under pressure, there is a chance that your decisions or the kind of trades that you could take, if you're a discretionary trader, obviously, would or have a tendency to go wrong as compared to a situation when you're trading at ease. So if you have that particular peace of mind and you know for a fact, okay, even if this month you are in a drawdown, you have enough cash flow, you can focus more on quality trades, and that definitely works.
So one question I have, Hari. So one of your major. Okay, before I move on to this question, what I would actually want to know is what is the scale of Livelong today? So how big team you have?
See, right now, I'll tell you, like, we have an in-house team of around 110 plus interns. And then right now we have other franchisees too.
Okay.
So currently I'm having like 3 franchisees.
Okay.
So one is in Delhi. So one new we have got in this thing Kerala again. And one more franchisee we have coming up in Hyderabad. So with respect to the franchisee, like every franchisee has another like 5 to 10 people.
Okay.
And we have an in-house of 110.
So one more thing, what I would like to know, if you are comfortable revealing, right? So this journey is maybe something you started 5-6 years back, or little more.
8 years back.
8 years back, right? So from zero, so working hard for 8 years into different financial domains. So what is the revenue that you have reached up to now?
If you're right now, if you look at the absolute revenues, it kind of actually comes around, just us directly generating, it comes around 25 CR annually. Now, if you kind of look at the auxiliary products and all, it is much more. But obviously, it is not our direct products. Those are products that we just distribute.
Okay.
So I'm not just counting that in. So that could go anywhere nearly like 100 to 150 crores.
Okay.
Because third-party products also we are distributing, and on those products we hardly have a small commission cut.
Understood. So I think this is also one of the important lessons what most of the people can take, right? So when you say you are from the field of finance, so the opportunity is huge. So when you actually work towards building things in a right way, so Hari is a prime example of how you can actually scale things from 0 to 1, right? So starting from a single person alone, quitting a job to now building a team of around 110, 150, and also generating annual revenue of upwards of 25 CR is one of the prime examples of how we can also try to focus on not just trading as a single source, or how we can actually try to build business around the financial domain to scale up. So this brings me on to one very important question, Hari. Right. So I think advisory is like one of the big this thing across
Consulting, yeah. So right now, so the major thing, major cash cow right now is a B2B advisory.
B2B. Okay.
That is, we consult for like businesses in their procurement, majorly on the commodity side. So let it be jewelers, or let it be you being a builder, where you kind of your raw materials are all commodities. So that is one particular field that is a strong point at the moment.
Okay, I think you being SEBI registered RA, you can also give advisory to retail also.
Correct.
So how does Livelong advisory amongst all stand out? Like, why is Livelong advisory different?
So the difference is that like whatever we are like whatever like trades that we kind of actually generate, they're all system generated at the moment.
Okay.
And every entry, every exit, all those things are actually predefined. So the difference is that I'm not comparing with the other people. See, many of the advisories out there, what they kind of actually do is, so for example, if there are 100 people, so they'll ask 50 people to buy, the rest 50 people to sell. Now from the 50 people who made money, again they'll ask 25 people to buy, 25 people to sell. And then again from that, they'll kind of actually do. And there's nothing else but a scam.
Right.
So on the other hand side, whatever we are doing is the same for all the clients. And the second thing is all are system generated. So at any particular point in time, you want to know the logic of the trade. So that is also something that we are sharing.
Okay.
Like we took this particular trade for so and so reason.
So you give around equity, F&O, everything.
Yeah, we do equity and F&O right now, as well as commodities also.
Okay.
So we have reasoning for every single trade that we undertake, and even though it is system based, so there is a rationale, and the rationale behind every single trade that basically comes in F&O or so and so categories will be the same.
Okay. And one more thing is with respect to your course, right? So when 93% of the traders or whoever is losing money, do you think this advisory or course can really help to change that number?
So that's a very good question that you have asked. So obviously no, like that is like if somebody is taking up a course or somebody is directly taking up trading signals or advisory, there is no way that he or she can straight away be profitable. But the good part is that your learning curve reduces, and you have something or the other to take away from somebody who is a profitable trader. And you, all of us know that like my trading style or my psychology is not something that is going to be suiting somebody else. But you can think about getting the learnings and developing a system that actually suits you. And at the end of the day, this is all about risk management. So if you can manage your risk right, then you can make money. So that's the thing. So when we have our courses also, our agenda is to bring down the learning curve and then to kind of actually impart knowledge in such a way that people know, okay, this is what is realistic, this is what is unrealistic, so this is what I need to focus on, and this is something that I should just keep aside. And the time that somebody takes to be comfortable keeps changing. Maybe somebody can get comfortable in 1 year, somebody can get that done in 6 months, and so on. So with respect to advisory, it is all about risk management. So what happens is, with respect to advisory, people who come to advisory, generally they come in for quick money. That is, if they have like 1 lakh rupee, they probably risk the entire 1 lakh rupee trying to make 2 lakh rupee or 1.5 lakh rupee. So one trade goes wrong, they're wiped out.
Do you also recommend quantities? Or
yeah, actually, yeah. So in fact, like we have a disclaimer where how you should be sizing your positions, all those things is basically mentioned. That is, we don't recommend anybody to take a risk of more than 2% or 3% of their capital. And on a personal note, we don't risk more than 0.5% of the capital in any single trade. So if you are a retailer, someone who's getting started with something, don't risk more than 2%. And I would recommend that if you're starting off, start off with maybe risking 1%, then think about scaling up. But the challenge that most people face is they don't have the capital. And some people, for them, maybe the capital they bring in is something that they come with a view that, okay, let me just gamble and see. So they come in with that particular mindset, they lose it, again they repeat the same process over and over again. So even though if you tell somebody to manage risk, on a practical note, he or she won't do it.
So, apart from this being greedy or being unrealistic, what do you think is one of the major flaws of retail traders who come into advisory? Like, what is that? Like, they are not happy with less returns is one that is extra this thing. So, apart from that, what is that they keep losing consistently without knowing?
Okay, so that is see, obviously the first and most important part is greed, and the second thing is they seriously don't know what they themselves are doing. That is, for example, let's say that I'm basically giving a buy recommendation to buy a stock at 100, to sell at maybe 102 with the stop loss at 99. So once the price reaches 101, so we as a trader, we know that, okay, this is a trade with a risk reward of 1:2. But for someone who's new to the market, who's greedy, he might think about entering the trade at 101.5 for a target of 102, where his reward is just 50 paisa, but he'll continue to keep the stop loss at 99. So that logical reasoning or that logical part is also something that is missing in many of the retailers. That is, they jump into the trade like completely forgetting or completely unaware of what is this concept of risk reward. And many times what happens is that only once they enter into the trade, they realize, okay, if the trade is going against me, this much money I'm going to lose. So when we take a trade, at the time of our entry itself, we know what is the maximum amount that we are putting at stake, correct? On the other hand side, when it comes to retail traders, after they enter into the trade, that is when they start thinking, okay, how much will be my risk tolerance?
Got it.
And they usually hold on to the trade till they wipe out.
So, yeah, Hari, like now, interesting question what I have is with respect to SEBI registered RA. If I'm not wrong, at one point you were the youngest SEBI registered RA.
Yeah.
So now there might be a lot
There are many young people. I became old.
Right. So, what actually pushed you towards? I think this you got the license way before the rules even came into picture and all of that. So, one, what really pushed you to get these licenses?
So, the thing over here is obviously being an RA holds credibility, and I got into this particular business at the age of like 18, but mainstream maybe from the age of like 20, 21. So as a 21-year-old, let's kind of say that I'm giving some recommendation, or I'm kind of actually asking you to buy this stock or sell this stock. You need to have some credibility, and that is basically what made me think about the SEBI registration, and that definitely adds value to your portfolio. And I'm from the engineering field, and I'm not from the finance background. So since I'm from the engineering background, obviously I need to show that, okay, fine, I have this particular certification, so that builds credibility.
So the reason why I asked you this is because, so what are some of the advantages you might say, or who really should get a SEBI registered RA?
So you should get a SEBI registered RA only if you are so serious into dealing with retail clients.
Okay.
Because the kind of complaints requirement, all those things are too huge. So only if you are so serious about dealing with retail clients, giving them advisory on what stocks to buy, what stocks to sell, giving recommendations, all those things, that is when you should think about a SEBI RA license.
Okay, now I have a basic question. Supposing you are my friend, right?
Okay.
So I have a group of 5-6 friend circle, right? So now I am not doing it as a service where I am charging them or something. I just recommend.
Okay.
So is it illegal?
Theoretically, that is illegal.
Okay, so this whole thing cannot be done even though I am doing
in your friend circle.
without having a SEBI registered RA.
So theoretically speaking, you're not supposed to recommend even to your dad.
Okay.
Or mom, or your sister, or your family. So theoretically, though, it is illegal. So you're asking to buy a stock at this price and sell a stock at this price. That is theoretically not right.
So next question what I have, Hari, is regarding RA and RIA, right? So like why exactly should one go for RA or RIA? So what are the differences and who exactly should go for RIA rather than going for RA?
So I'll just give you a quick example. So if I'm an RA, then I can actually give you recommendations to buy Reliance at, let's say, 1000 rupees and then sell it at 1200 with your stop loss at 900. So as an RA, this is your primary responsibility. You can actually give recommendations of stocks. You can release research reports on stocks. Plus, you can tell which price to enter, which price to exit, where your stop loss would be, all those things. Now, as an RIA, the major difference is that so today Saket is coming to me and telling that you had 10 lakh rupees. As an RIA, I can tell you put your 2 lakh in Reliance, put your 2 lakh in ICICI, put your 3 lakh in Axis, and then I can actually do a portfolio allocation for you. So the major difference is that as an RA, in general, on a broader note, you tell which stocks to buy, with what target, what stop loss, what entry price.
Okay, so you can't recommend quantity.
Yeah, whereas as an RIA, I tell you how much money to put where and what stocks to put your money.
So who should go for RA? Who should go for RA? So if what is my intention that okay, I have to choose RA.
So if you're thinking about fund management, and if you want to kind of actually manage portfolio of clients, I'll giving allocations of stocks, all those things, then RIA is recommended to you. Okay. On the other hand side, with respect to an RA, you want to give recommendations on a broader note.
Okay, one more question is, let's say I get a RIA license and I start managing for clients. 2-3 questions. So like how a mutual fund works. So can I enter on behalf of clients?
Execution you're asking?
Exactly. Okay, so second question what I have is, how should I charge? Can I charge based on AUM or can it should be a fixed fee?
I'm not speaking much about it because I also have to go through some new rules, all those things have come for the RA. I'm not so familiar with it. Like I'm not getting into it.
Okay. So now Hari, supposingly I want to apply for RA. What is the requirement? So who can actually apply for RA? And after you apply for RA, so what is the kind of regular procedure, scrutiny and all?
Yeah. So the preliminary step is that you should have cleared NISM RA exam. That is the preliminary. And many people think that NISM RA is an RA license. No. Okay. So NISM RA is the most preliminary thing, and that almost everybody can clear if you have a basic understanding about the markets. So after that, you can actually apply for an RA license on SEBI's website.
Okay.
You can apply for a license there. You can submit your documents, everything, and all those things can be done by yourself. You have to submit your educational proof, your NISM certificate. Then you should submit a business plan on how you are planning to set this up as a business. How would you be taking it forward? On top of it, you should also be mentioning how would your research activities be done. So what kind of strategies you would be following. So once you submit all those things, then they'll call you for an interview. Okay. So it can be on Zoom, it can be physical, all those things. And then during the interview, they'll definitely check your knowledge level. Okay. So more than the preliminary paperwork, what is actually a little bit more tough is actually the interviews that you'll have to attend.
So what kind of questions will they be asked?
They basically check your subject knowledge. Subject knowledge in the sense like how good are you at analyzing a stock. So not only technicals but also fundamentals they look at. Okay. And then they kind of actually see like what is the kind of methodology that you're going to follow in order to give research reports. How are you kind of actually going to give recommendations. Then on top of that, they also check out your infrastructure. That like let it be softwares, let it be the data that you have with which you are going to generate these reports. They also check, so for me, and depends on person to person, I feel they also check like if you're trading, like what were you doing, how was your performance, all those things. And then to make it a point that you're not dealing in any illegal activities, they also check your bank statements and stuff. That's it.
So that means it doesn't look like that's it, because the thing what you said looks pretty hard to.
Yeah, like theoretically speaking, it's easy, but it's a time-taking procedure. And
so when you say infra and all of that, what do they really see? Like
infra and all, like for research activities, what softwares are you going to use?
Okay.
Like, do you have your own dedicated office space? Now, even if this data, all those things you have, whatever you say, does it make sense?
Okay. So now, Hari, like regarding the same thing, right? So once you have got your RA license, what is the kind of scrutiny that you will be under, and also what are the things you are not supposed to do?
So the complaints reporting is a major part. Okay, so complaints reporting is basically the major part. So with respect to the clients that you do service, with respect to like conducting quarterly reports, now keeping storage of the reasons behind each and every trade that you take.
Okay.
And there is a lot of trading restrictions also for you. That is, you should not be entering the trade 30 days prior or 30 days after or 5 days. So between 30 days before and 5 days after you have taken up a trade, given a recommendation, you are not supposed to trade in that particular script during the duration of time.
Oh, okay. Before 30 days and after.
Yeah. So these are the major things that you have to kind of actually take up. And you should not be in a business that basically contradicts the client's interest.
Something like?
Something like, for example, when I got into RA, I gave up on sub-broking.
Oh, sub-broker. Okay.
Yeah. So things like that.
Got it. So this very well sums up on who exactly should really go for RA licensing. So if you're planning to trade on your own, right? So then it makes hardly makes any sense to go through all this, go through a regular compliance to just trade on your own. So if you're really looking to build business around the markets which involves retail, and depending on whether you want to just recommend stocks or you want to do end-to-end management of portfolio by recommending quantity building portfolio, so you can either go for RA and RA. So is it of the same level or RA is difficult than not?
I personally feel RA is more difficult. With respect to the complaints part as well as to the securing the license part, RA seems to be more difficult.
Okay, and also one more important thing what we should also note is by doing this, if you're recommending something, you yourself cannot trade in that, which is the biggest maybe disadvantage if you're a trader yourself, right? So you have people to recommend, but unfortunately, if it is a great call, you yourself cannot trade in the symbol. So then the next question is, Hari, so this financial year especially has been very difficult with the volatile market. I think we already mentioned about it in the first part of the podcast. So how has your performance been both in equity and F&O?
So this quarter has been like decent, but if you have a look at this financial year, on F&O we are down. Right now we are down around 4%.
Okay.
Whereas equity, after all these things, we are actually up around 11.5%.
Okay.
That is the current situation.
So do you mind giving the verified
Yeah,
P&L
sure,
link? Okay, so I'll be attaching the verified P&L link down in the description below, so you can check out Hari's.
So last financial year F&O we did like 32% after charges.
Okay.
Equity we had done around 22%.
Oh, that's amazing. So I think both the financial year links can be put down in the description, so make sure you check that out.
So from the time we have our license, our performance, that like what we have been doing is visible on the small case side.
Okay.
With respect to equity.
Understood. So I come to the last two questions of this podcast, Hari. So I think for you, the right kind of question that I should be asking, which you can answer, which you can add an expertise beyond what all of us know, is if somebody wants to start a business in the field of finance, right? So where do you think the opportunity lies today, and where he can actually tap into?
So the honest answer is there is opportunity everywhere. But the problem that most people make, or the problem that most people do, is they don't focus on one thing. They do multiple things, and then that particular process they end up having focus nowhere. So you have to figure out for yourself like what is that particular activity that is going to be a cash cow for you.
Okay.
And the other bunch of products can just be cross-selling to your existing client base. Now, once again, in this particular domain of finance, you can actually make serious money only if you are able to cross-sell. That is, if you are focusing only on a single product, it is in fact a little bit difficult, because your acquisition cost, all those things are like going like up really high these days. So it could actually be a thing about cross-selling, and you should be able to focus on cross-selling multiple products. First stabilize yourself on maybe one or two products, and then think about multiple other products that you can look forward to cross-sell. So if you ask me like if you are to start right now, I would say definitely consulting is a very good area. And now algo, even though like little bit of algos are in a gray area, algo is also a domain that is of huge interest to myself also.
In case if somebody is planning to get into markets with so many like F&O changes, SEBI trying to curb retailers from F&O participation, with all this, honestly, do you believe market or F&O as a whole is a good domain to start a business? Why? Because on one hand you have regulators trying to reduce and you are trying to promote. So you are
So a very good question. So see, the thing is like, let it be any business. So you can focus on building the business only if you know that this business is actually going to be there for the next 10 years or 20 years. That is like, for example, if there is a human being who knows that okay, tomorrow he is going to die, or next month he is kind of actually going to die, do you think he will actually focus on doing something, working on something, or he'll just enjoy his life for the next 1 month? Obviously he'll focus on enjoying, right? So same way with respect to F&O, with too many regulatory changes, all those things that is basically coming in, this is something that is a huge turnoff for us also. However, focus has been on equity. Like from the last 1 year, our major focus has been on equity, because if you have a look at the business model or the way of working in equity is 10 years back and right now is still the same. That is the momentum investing strategies like that used to work for us like 3 years back or 4 years back is still continuing to work right now with similar drawdowns, with similar performance, all those things. Whereas F&O, if you have a look at it, every 6 months or every 3 months these times, you have to change your strategies. Market environment changes, premium behavior changes, lot sizes changes and whatnot, expiry days changes. So when there are too many changes, you can't focus on it. Whereas when there is something that is stable, that is basically you can focus on building a business out of it. Due to the same reason, right now our major focus is on equity rather than focusing on F&O.
Right. I think we also started shifting our focus majorly into equities from a full F&O. So before we didn't care about like what stocks we had. We were only going for HDFC Reliance. So now we are reducing our exposure to F&O and increasing our exposure.
See, that's the thing. So for example, let's say that I'm into the restaurant business, and this month my focus is on making the best biryani. And next month I'm being asked to do only dosha. Then so I should start making dosha. Then after that I'm being told that I am only able to sell sweets. Then I'll be focusing on sweets. But at the end of the day, you are not growing anywhere.
You're nowhere.
You start developing something that reaches some sort of a stage, then again you have to replace the product that you're trading. So whereas on the other hand side, now let's speak about a banking business. So if you look at banking as a business 10 years back, banking as a business right now, the only thing that has changed is the technology. Their modus operandi is still the same. Whereas when you have a look at trading, every 6 months is changing. So now that we don't even have some of the expiries that we used to trade before. The premium behavior has changed. So when too many changes come, it's very difficult to build a business on top of it.
Right. So this brings me on to the last question, Hari. So that is more of your closing thoughts on how exactly a trader should approach the current this thing, or we already spoke about like what an entrepreneur business opportunity there is, right? So with respect to markets, how can one approach?
So with respect to markets, the way how I am looking at it, so right now is basically a time for everybody to gauge advantage of the situation. So for example, let's kind of actually say that I was somebody in this particular domain who have been stabilized across some strategies. I have an upper hand. But right now I personally feel apart from Jane Street traders, there is nobody else who has an upper hand. That is like almost everybody is in a tough situation where they're trying to figure out. So, and if you can actually walk a way around it in a way that you can manage your risk, adapt to the present market situation, you are basically starting off at a point where all the retailers are also on the same note.
So apart from equities, Hari, are you also looking into any other markets?
At the moment, the markets that we are looking at is commodity, cash, F&O. So even though F&O we have these kind of volatility and all, like however commodities like crude, gold, all these products are giving us very good trending moves. So this is also something. So usually what happens is once somebody gets started with F&O, they purely stick with F&O. That they'll close their eyes on the other commodities. So I would recommend that you also explore the other this thing like other products too.
So I think this very well sums up the entire thing on how you can actually build or start to explore various things in finance. All right. So market is just one of the aspects. So there is aspect of insurance, real estate. In market only you have so many, like you have commodities, you have advisory, you have courses, you have so many things to build around, right? So Hari is a perfect example, as I mentioned, on how you can actually build an entire end-to-end service around finance. So I think you also had ideas of getting into SME IPO, if I'm not wrong.
Yeah, yeah.
So like, do you want to tell anything of?
Too early to say something. Let's hope for the best.
Yeah. So with this, we also come to the end of the podcast, guys. I hope you liked it, and thank you, Hari, for coming here and giving so much insights about everything that you do and how exactly we can also learn a lot.
Correct, correct. So thank you, Sake. So thanks for this opportunity. So it was great to connect with you, and it's also great. Probably we can also collaborate on a lot of things moving
Definitely,
forward. So that was a
absolutely.
great chance to interact with you. Thank you.
Yeah, and one best thing about Hari is how honestly he told, like, even though people sell courses and advisory and all of that, so he very openly said people don't really make money, but he also told that how people can really make use of it and make money. So what is the right way to use them and how not to get misled. And one thing which you can definitely check out is services with Livelong. Maybe we can attach the link down in the description. And before we close this, we have a small token of appreciation from RN.
Thank you, Sakit.